Okay, session 2 in this mini-series. What's the most important thing to understand when you're looking at candlesticks? Now, before you can answer that, you've got to understand the 3 things that a candlestick actually shows you. Essentially, you can have all sorts of different types of candles, but they tell you one of 3 things. You either have a continuation candle, a big solid bodied candle. You have a rejection candle, a candle with a very large wick, very small body. Or you have an indecision candle. This is what's called a doji. This is one with a very small body, small wick, either side. That essentially tells you nothing's going on. But where people fall into a trap is they overinterpret candlesticks. They try and find meaning in every single different candle and try and find a trade out of all of this type of stuff. Now, you need a lot more to be able to do this. You need a lot more depth of understanding. Click the link. We'll explain the amount of depth that you can go into with other tools as well. But with candlesticks, really what you're trying to identify, and the important thing is change. So imagine you're trading a range, market's going nowhere. If you get an indecision candle in a range, well, that tells you what you already know. The market is undecided on what it wants to do. So you're waiting for these candles within context. Let's take an example. You're trading in a range. You then get a solid continuation candle. Market moves out of the range, big green candle. This means something because this shows you change. Now, the bias shifts to the upside and you're looking for continuation. New candles do not tell you anything now, apart from continuation. Once that has happened, the next thing, remember, it's always about context. The next important thing is, where does the change come from? So next up, you're waiting for a rejection candle. This would be a situation where the market trades higher, and then you have a candle with a big wick and a small body. Now you've got rejection. Rejection is only important after some degree of direction. If you don't have direction, you can't reject a move when you're just trading in the same area. So that's when rejection helps. Perhaps the most confusing candle to read is a doji candle, effectively a candle that tells you the market's not really sure on where it wants to go. These, again, are something that needs to be interpreted with context. Market moves higher. Small doji candle. What this tells you is people are unsure about the movement. Now, this puts the buyers in a weaker position. If you've been buying and the market's going up and now people are unsure, the next logical step is buyers are likely to sell. Sellers now have more confidence to sell. So in fact, a doji candle, a candle that shows uncertainty, is actually a sell signal after a move higher, a buy signal after a move lower. This is what you would call a morning or an evening star candle after the directional move. So the key thing, the most important thing when you're looking at candles, is not learning the different names of different types of candles necessarily. It's about understanding the context and when they're important. And the key thing that makes a candle important is change. Change is the current situation. That's the most important thing. Next session, we will look at patterns. How do candlesticks patterns build? So combinations of candles that you can frequently see and you can then start to use to actually start to define trades. So we're moving through to that next session. Click the link, click subscribe, and we'll be covering that next time. See you soon.